people say, oh, just get me out of the market. Or I have another fellow, Bob, we'll call him. He calls me and he says, well, I just inherited a couple $100,000. My wife unfortunately passed away, but I'm going to wait till the market calms down to invest that. And I said, okay, Bob, well, how will you know the market's calmed down? Well, there won't be so much in the news about it. Okay, that's never going to happen. It's like stocks won't be so volatile. I said, you mean they'll be back up? Yeah. Well, how high should we go before we buy back in? I don't know. So basically, poor Bob is telling me buy when the markets go back up. And here's the thing, and the reason why Mr. Davis from before lost $1 million. It's easy to decide when to get out. It's hard to decide when to get back in. Because if you were invested every day in the stock market, from 2006 until the end of 2021.
And 06 includes that gigantic recession.
And the pandemic.
And the pandemic recession, right.
So you would have averaged 10.6% annually during that period. So all the ups and downs and terrible
things. So $10,000 grew 4.5 times.
Yeah.
Yeah.
If you missed the 10 best days in the market, you cut your return in half.
More than half, yeah.
And if you missed the 40 best days, so you're out, Mr. Davis was out almost a year. If you're out just over a month, you cut your return to 3.5%.
So you lost 90% of your return by missing how many of those days?
The 40 best days.
40 best days. You lost 90% of your return.
Now, who can tell me what the stock market has done over the last week?
It's been great, right?
Yeah, we're in this period, we're having those best days. I'm not certain we're going to keep going in that direction, but these are the best days that people are talking about. Had you waited to get back in, you would have completely missed the last week and a half in the markets.